So guys, today we'll talk about a really useful things for traders, patterns, what they are, how to use them, and how they can help you in your trading session. And I also want to tell you about 8 patterns that every trader should know. So I can't wait to tell you everything. So guys, let's get started. A trading pattern is a specific trend that occurs in the prices of assets and traded over the discrete period of time. And typically traded patterns are considered to be one of the aspects of technical analysis. Chart patterns can be described as a natural phenomenon of fluctuations in the price of a asset that is caused by a number of factors, including human behavior. As a result of long-term observations of the market, it was noticed that chart patterns, or technical figures, are periodically formed on the price chart, according to which further price movement can be predicted. Most often, patterns are divided into continuation patterns, which give continuation signals or the ongoing trend, and reversal patterns, which give, as you might guess, reversal signals. It is really important to know that the probability of working out chart patterns is not 100%, of course, but nevertheless, it is high enough to use pattern in trading. So guys, let's move on to our patterns. Double top. The double top pattern is a twin peak chart pattern representing a bearish reversal in which the price reaches the same levels twice, with a small decline in between the two peaks. Peaks are usually at roughly the same price of resistance level and can be rounded or pointed. So the price must break out of the middle reversal point and go in down direction. So guys, let's take a look at this chart. What I have shown to you so far is what picture perfect by book double top looks like. But in real life, it won't look as perfect. And look, here we have double top. The price went up, then down, then up again. And after that, exactly here, it's a good entry point for you to make a put option, because after this moment, the price usually went in down direction. Double bottom. The double bottom pattern indicates a long-term or intermediate reversal in the overall trend. It is defined by a price drop of assets preceded by a rebound, then another drop to roughly the same level as the first drop, followed by a more significant rebound. The double bottom pattern resembles the look of a letter W, where the lower level is considered the support level. In a nutshell, we have two successive rows that are usually at roughly the same price, and the price must break out of middle peak. So what about this picture? This is of course a double bottom, and you see here the price went in down direction and then up and then in down direction again. And after that, you're here exactly this moment when you can enter this deal, because here the price reached this level, and from this level you can make a call option, because then the price will grow in up direction. So the same pattern, but is vice versa. Head and shoulders top. This pattern has 3 peaks, and it looks like a head and shoulders because the two outside peaks are similar in height but shorter than the peak in the middle. This pattern is typically associated with a trend reversal from bullish to bearish one. This is a standard pattern for tops and has one of the lowest failure rates. This pattern is formed when the price rises to peak and falls down to the same level from which it began to rise. Then it forms a peak higher than the last peak. Then it decreases to the original base again, and after that forms a third peak lower than the second one. So from here it begins to decline to the base level. And when prices break through the baseline, a bearish reversal occurs. So look at this pattern, guys. One more time in real life, all the patterns looks a little bit more messy. So they're not follow the pattern requirements exactly, but here you can also notice the shoulder of this pattern, which is a pattern head and shoulders. So this is the first shoulder, and this is the head, and this is the second shoulder again. And after this moment, the price usually went in down direction. And yes, remember, in real life there can be more rough approximation of what the pattern should be. Head and shoulders inverse. So the inverted head and shoulders pattern indicates a movement towards a bullish trend. The pattern can be recognized when the price falls to a through and then rises, then falls lower than recent minimum forming the head, and then rises again. Finally, the price starts back, but not as deep as the previous time. When the last through is made, the price actually moves upward toward the resistance level and breaks through. So here, guys, you can see this pattern, which is again not looks perfect, but in real life you have to understand this. Again we see this first shoulder, again we see the head and the second shoulder, and after that the price went in up direction very easily. This pattern is exactly inverse head and shoulders. Triple top. The triple top pattern occurs when the price of an asset creates 3 peaks at nearly the same price level. The area of peaks is resistance. The pullbacks between the peaks are called the swing lows. After the third peak, if the price falls below the intermediate through or trend line connecting these low points, the pattern is considered complete and traders watch for a downtrend. So here you can see this pattern in a really clear way. It looks like head and shoulders, but here there is no head. It has 3 tops on the same level, and this is a triple top, and it's a really good example. And it looks almost like the picture, and here we can see in a clear way that firstly the price went in up direction, and these 3 tops have formed, and after that the price really went down. Triple bottom. The triple bottom reversal pattern has 3 roughly equal lows and indicates an opportunity to take a bullish position. This pattern represents 3 distinct throws at roughly the same price level separated by 2 intermittent peaks at any level. Breakout occurs when the price exceeds the extreme of the intermittent peaks or a trend line connecting the high points. So here we have the same pattern as the previous one, but it's vice versa. So we see here not so clear 3 triple bottoms, after which here we can enter this deal because we can imagine this line, this support level, and after which you can enter this deal with call option if you see this triple bottom. Follow wedge. The following wedge pattern is a bullish pattern that begins wide at the top and continues to contract as prices fall. So a falling wedge pattern signals a continuation or reversal depending on the prevailing trend. So however, in most cases the pattern indicates a reversal. It occurs when the price of the stock is falling over time. When the price has been falling over time, a wedge pattern can occur just as the trend makes its final downtrend move. So when the price breaks the upper trend line, the asset is expected to reverse and trend higher. And guys, look at the chart. It's a really interesting pattern because after this falling wedge, after the price fall, you can notice that the price really went in up direction. You see sometimes the price slowly moving down with these patterns, and if we look at this picture, if we draw these imaginative lines, after breakout the price will go in up direction. So this is a really good moment to enter the new form bullish market because it's a pattern of the reversal of the trend. Rising wedge. The same is true for the rising wedge. Rising wedge occurs when the price of a asset is rising over time. The rising wedge pattern indicates a higher probability of further downside in the price after the breakdown of lower trend line. It's a bearish pattern that begins wide at the bottom and contracts as prices move higher and the trading range narrows. And guys, the same pattern but a little bit different. You see here it's not so clear rising wedge, and here we can also draw these imaginative lines with which from this level it's a really cool moment to enter this deal with put option, because after that the market will become bearish. It's one of the patterns of reversal of the trend but in down direction. So guys, these were all the patterns for today. They are the most basic and can be used by both beginners and pro traders. But if you like this video and you want to analyze more complex chart patterns, write in the comments and I will do it for you. And also subscribe to my Telegram channel. There is lots of interesting and useful information as well as free trading signals. So I'm saying goodbye for today and see you in the next video. Bye bye.